All right, welcome everyone. It's Monday. Hope you guys had a wonderful weekend. We're back for some more live trading action. How's it going, guys? Hope you had a let us know. Let us know what you did over the weekend. Hopefully you did a lot of trade journal review and things like that. I know that you did probably review some trades, Victor.
Yes, hi to everyone. Yes, I took the weekend to review my trading related actions of last week. So that is the best way. You're calm in your mind, and you can safely. You don't have to look at the charts. There's no price action and going on, so you can have the calm mindset to look at those things and reflect and be honest with yourself. So yes, I did that. That's what I usually do on weekends. How is everyone been doing today? Let us know in the chat where you're from and how your week has been, or your weekend, I should say.
No clown costume today. It doesn't have to be a clown costume every day. I mean, we have to make a bet. We have to make a bet with Alex. It says your voices are lagging. Could you let maybe it's just you, but could you let me know in the chat if my voice is lagging? I can hear Victor perfectly fine. So maybe it's on your end, Pokemon guy. All right. So today.
Yeah. Then again, they wouldn't be able to see if I'm lagging or not, since they can't see my lips.
Oh, that's true. Right. Top-notch sound. I like that. Okay, guys. So we have something very interesting going on today. We're going to be trading gold, and we are going to do this. All right. This is interesting. This is weird. I mean, it's fantastic that your daughter draw a picture of you. It's identical. Maybe you look like me. I hope you look like me. Otherwise, that would be weird, man.
The question I would have is your daughter watching this stream? That would be the logical question here, because
yeah, I mean, maybe. How old is she? Maybe she's learning how to trade. Maybe she's like, you don't know it. Maybe she's watching the live streams, and then all of a sudden she's gonna be like, "Dad, look at this. Is this the trending market?" Yeah, I'm better looking, but you're still a 7. Ah, it's good. It's setting up yourself to be better than a 7. That's good. I like that. So okay, so I'm gonna share my screen here. Before we go into gold trading here, I want to just go through the trades that I'm in currently. I'm in a few trades, so I'm going to be sharing those with you guys. You should be seeing trading view here. So I'm still in GBP CHF. I'm using that set and forget approach, and this is just horrible to watch. So I'm still in this. I just forgot about the trade, honestly. Other one is CAD CHF. I got a note here that this should probably have been my TP, is because you see on the daily it aligns very nicely with these candle closes right here. But again, this is a set and forget trade. I'm hoping that we're going to get a push up for CAD CHF to close this trade in profit. Another one I'm in is ADUSD. Hit TP1 this morning. I'm waiting for that TP2 to get hit. Kind of looks likely that it's going to break out as a good looking trend here. And then we have a short on Euro NCD that I entered this morning. It's all of these trades are based on my weekend trade planning. And one of my weekend trade plan was either to go long on Euro NCD if we had a break and retest to the upside, or go short if we had a break and retest to the downside. And that's basically what we got right there. And then a low time frame retest. You can go on the 5 minute and you can see that it kind of like a low time frame retest of that level. So that's what I'm in currently. Just honestly, like very much enjoying back to being a scalper. This month up, I believe up 6 or 7 R with minimal effort, and I really mean minimal effort. I'm spending 1 hour on the weekends.
Scalper? You mean swinger?
No, swinger. Yeah, did I say scalping?
I think you did. Yeah.
You know what? Like, I say things that I'm not supposed to be saying all the time. Like, I don't know if it's something. Maybe I don't know. Maybe I'm partially retarded. I don't know. Maybe it's just too much stress from trading.
No,
Something like
I
that.
think
Probably.
it's just a slip because we're going to be scalping in a short while. So I think that's a
Maybe.
little slip there.
Maybe that's like a Freudian slip. Is it?
It is. I think it is. Yeah.
I'm thinking about scalping too much. Yeah. Okay. So that's what I'm currently in right now, and all the trades I'm taking is I'm doing my my trade journal reviews on the weekends, right? And it's such a simple approach. I have my list of number one here, and these are basically the trades I'm looking at. So I have the number one list, and I can go through it here on the 4 hour. You see, I got the lines all marked out here, and if any of if price action starts moving in the direction of these lines, that means basically my trade idea is invalidated. And you can see here on USD CAD that it's based on very simple high time frame levels, break and retest. This is basically a break and retest, but it's also in a high time frame range where I want to go long on the bounce in the middle of the range here. And it's like this for almost every pair, right? And yeah, it's a very, very simple approach. And probably next week, I'm going to break it all down for you guys to show you exactly what I do on the weekends, how I mark out the levels, and then what confirmation looks like and all of that. And I'm also going to talk about how I actually build the list and everything. So, Victor, are you in any trades?
No, I'm not. But I can show my chart to see what I'm looking for. I'm waiting for actually some signals. Let me get my screen up. Let me
add the what is it called? The disclaimer, the risk disclaimer. We are not financial advisors, which means you should not take anything that we say or do as financial advice, only for informational and educational purposes, of course.
What I have been looking is that we formed these bullish structures and we retested it afterwards. This is on the daily time frame, by the way, and I have this as the target. So basically, on the daily time frame, I'm expecting sometime in the next couple of bars that this target be hit. Right, so I have that at the back of my mind, but I'm still looking, and I do have like this area that we have reacted quite nicely from it. And we are forming a quasi on the lower time frame. So I know that I want to be long because I think this target is still valid, a good target. But I'm aware that we are forming a reversal pattern even on the H4. So I'm aware that we might retrace maybe further before doing what I think will happen eventually. So I'm still looking, but after we hit this entry order block on the H4, we formed another one. That's a confirmation for me that this is the place where sellers want to be getting in, right? And after that, we are forming a possible right shoulder right here. As you can see, this is the left shoulder, right? That's the head, and that is the neckline being broken, and we are currently in a possible right shoulder. If that is the case, then we should be catching a short from this order block, right, for a move at least to this lower end, or perhaps even lower. But on the higher time frame, my bias is still up, since we are coming from a daily order block, and this is basically the target that I have on the daily. So I have on the daily, I have a bullish bias, but on the H4, I can expect, or I'm taking into account that maybe price might retrace before continuing. So that's what I'm looking for. And right now I don't have a signal yet. I'm looking for possible entries in here, and perhaps depending on what price might do a little bit higher, I might be taking some shorts, even though that's what I'm looking at. I haven't had any signals yet, but as we speak, I'm searching the market for signals. That's on
awesome.
EU.
Right. My ADUSD chart is pretty. Yeah, it is. This is how it looks. Beautiful. Beautiful. Love it. Okay, so now that we kind of go through the first stage here, we are... I'm going to talk about the plan here for today. So, as the title and the thumbnail might have suggested already, we're going to be trading gold today, and we're going to be doing this a little bit differently. We have, both of us, me and Victor, have access to one account, and it's a 100K high stakes. Let me just, yes, is it high stakes? Yes, it's a high stake account. It's a two-step challenge. I've never done that actually. So we have access to a 100K high stakes evaluation account, and we're going to trade that on gold. Now, this is going to be very interesting. It's going to be an experiment because I don't trade gold very often, almost never, and Victor also doesn't really trade gold. And we're going to be trading this account together. Now, it's important to remember that we're doing this strictly for educational and informational purposes, because we do think that this is going to be very educational for you guys, and you guys like gold. We've been getting a lot of comments and suggestions that we should be trading gold more often here live. So if you guys do the same here with an evaluation account, you will actually lose the account. You will get disqualified. You're not allowed to trade together on one account. But the only reason we're doing this is because we find it to be very of high educational value to trade the same account and kind of discuss the ideas between us live here, so that you can listen to basically the way we're thinking and the way we're setting up the trades. And it's also going to be an interesting experiment where we're basically taking both of our experiences as traders with two different systems and approaches, and we try to find a good middle line. Like, I've never tried this before. It might not be great at all, or it might actually work very well. All right, so let's Victor, let's talk a little bit about how we should set this all up. What do you think is the best approach to do this? I think we need to discuss first, like, the risk management side of this. How because we both trade very differently when it comes to risk management and position sizing and the number of trades or entries we're taking per setup. So, what do you think about that? How should we structure that?
Well, I think we should have a maximum number of trades open, so that we don't have like different number, like I'm only trading one and you maybe 10 or vice versa. So the number of trades open, I think is good, so that we are comparable. And we should have the same risk setting, not necessarily per not the size, because the size, it doesn't matter. The risk is actually what's important. You can have a big lot size, but if you're managing it well, it doesn't matter. So I think it's the risk, and we should agree on to what we think is what is adequate. And also we think we should take into account that we're two on it, so we have to halve the risk. I think whatever we think is adequate, maybe take half of it. So I was thinking to I don't know about you, but maybe 1% of the account each, in the back of our head, like that's the total. And you're free to fill that in as you please. So either in one trade or in 1/10 risk trades. What do you think of that?
I think that makes sense. Let me I gotta make a copy here. So we're gonna do doing gold. So the idea here.
Are you going to be entering through TradingView?
No, I'm going to be entering. I'm going to be doing my analysis on TradingView, and then I'll enter in MetaTrader. So the idea here is not to have a competition between you and me, right?
Exactly. Yeah. I don't think that'll put us make decisions that are good for the competition, like risking a lot.
Yeah.
but they're not very educational. I think at least.
Yeah, I mean the competition that's the one we're gonna do on Wednesday. We're basically gonna repeat what we did last Wednesday. You know, the live scalping madness is gonna be insane. We're gonna be doing that on Wednesday. Your sound has a return. Is it? Maybe I don't think we do.
I don't hear you. I don't hear any echo
No,
on you. No,
I think it
but I
might
don't know if
be.
the audience.
I
Maybe you
think it
should.
might be him that has two tabs open.
Perhaps that could be. That could be it. Yeah.
Okay, gold 5ers evaluation, and we're gonna go into gold. So I think we should be treating this from a more of an intraday perspective to make it interesting, right? Because obviously, if we're going to be trading from swing trading perspective, then there might not be a trade for the whole session, basically.
Yes, I think if we don't have the since we're doing this live, I don't think it's going to be very entertaining to see us waiting. So it has to be something with activity, and the only way to do it is to scalp, I think. So it needs to be scalping on the lower time frames.
Yeah, well, maybe not scalping, but definitely.
Well, it doesn't have to be necessarily scalping like in out every minute, but it has to be something that puts you in a trade quickly, because otherwise you will be waiting an hour and nothing happening, because
So are we going to take trades that are only? We're going to do analysis, and we're going to try to see if we can find a good trade together, right?
Okay, that's going to be challenging though, because we don't trade the same. But yes, I'm up for it. What I would think is, if I need to enter often, and what I would be looking are the reversal patterns that I trade, the quasi on the lower time frames, and I would like to look for confluence with order blocks, and that way I can have more signals, and it can give me nice moves, on a 5-minute chart from one OB to the next one. And I would think that's something that I was thinking of doing today, because if I wait for my actual signal, that may happen once or twice in the whole day. So I need to not be as selective.
Okay, so what we can do then is, you can bring up your screen, and you can kind of walk the audience through what you're looking at, the levels, everything. Kind of break it down, what you're looking at and your trade, and then
sure.
While you do that, I'll see if I can find a trade as well. I'm kind of I don't know how this is gonna go. It's gonna be very interesting. Yeah, let's see. Right. So yeah, you break down, see if you can find a trade, and then I'll switch over to my screen later.
Sure, I will start then. Since we're going to be taking trades on the very low time frames, looking at the weekly is nice, but it's not very relevant right now. So I start on the daily, and what I see is that there is a fresh order block that was formed actually before that already, which wasn't fresh. Price came into it, and I would expect some kind of reaction to the upside, and that's what we are getting here. Another fresh order block being formed, and today we interacted with it. So I expect now, I would like to catch something going up if that's possible, right? But it doesn't mean that I'm going to be going long necessarily right away. So that's on the daily. If I go to the 4 hourly, what do I see? Relevant. We had this order block that we were reacting, and we did have this nice, very bullish wick left behind after it reached the daily order block. So that's another reason why I think I should be looking for a long. And I think it's easier for longs here. The other thing I see is we do have this order block, which could be what is containing price. So let's go to the other time frames. What do we see? So I see an order block here. Actually, I see multiple, and I already marked them with the H2. This order block, that's not very helpful since it's very large. So I need to refine the area that I'm interested. If I'm going to go long, where am I going to go long? Either I could only use this order block. This, I will show you like this one, right? This is much tighter, but I don't like doing that if we have like another one, bigger one, because really I would like to just merge them and look for other signs. So if we look to the hourly, I see a nice tight order block staying there. This could be a great place where price could go into and move out. We're still far away from it. And if I check on the news for today, let me check what we have today. We don't have any high impact news coming up on Forex Factory. Okay, so I have this area where I'm interested in buying. That's the H1 I'm showing right now. And we have on the H2, that was on the H4. Okay, let's see. All right, on the H4, on the other side, right? I'm always looking at a short and a bull and a buy entry, right? So even though I have my bias, doesn't mean that I'm only going to be looking for one side of the market. So, and especially now, since we're going for like shorter trades, I want to catch both sides if possible, if the opportunity presents itself. So this is what I see. This hasn't been formed yet, so I need to take it off. Okay, so I'm interested in going long from here. Okay, so I need to have that on. This is what I'm interested in, this order block, but we're not there yet. That's why I have this reminder there, the alert. If I go to the lower time frames, that's the one I have. I don't have anything here. So actually, I don't have any reasons to go long or shorts based on the hourly. If you go to the lower time frames, maybe I can spot a quasi. And I do see this as the quasi. That is the 15-minute quasi. And maybe this can help me find entries coming up. And I don't see anything here. Even though I do have the H1 there, I don't see it necessarily. I do have this big handle on the 15. So that's interesting. I will mark it with the 15, and maybe I will use that. But it's quite wide, so I don't like that. I need something to refine that. Let me go to the 30-minute, and this I like. All right, so I'm gonna switch to the 15. I'm gonna switch to the 30-minute. I'm not gonna use the 15 minutes anymore. As you can see, because the 30-minute is showing me better structure. Look at this. I'm going to mark this. This is the quasi on the 30 minutes. There we go. That's the template I have for that. And what I see is this. When I mark this, what do I see? I see an order block that is the same place with the H1. That makes sense, right? So that's the alignment that I talk about a lot. I look for the higher time frames to the spot I'm interested in, and then I go to the lower time frames or a different time frame to find alignment, confluence, telling me the same narrative. And now I have multiple time frames telling me that I can be confident that that is a great area, right? So I will have the 30 minutes there. That gives me a confluence. As I said, that was the area that I identified, and the 30-minute is in agreeing with that. So when price reaches that, I'm gonna be looking for my entry. That may take some time. So let me see if we can get something else in the meantime. If it makes sense if I can spot anything else in the meantime. Let's see. There isn't a little order block here, which I could scalp when this is on the 5-minute, not on the 30. Let's check. Let me see. How many do I have? I have 1, 2, 3, 4. Yeah, I don't think that's I don't think that's a great order block anymore, because there are too many entry order blocks, right? If there's too many entry order blocks, you're gonna have a low win rate, and it's gonna be difficult to be profitable. So I'm going to watch price as it is coming into this area to see what it does. Does it form a quasi again? does it form a candlestick pattern that is indicative of a rejection? When I get that, right? So I'm not going to go in blindly. I'm going to wait for that to happen. Then I'm going to get in and put my stop somewhere below here, or perhaps all the way below the order block. There's something uh, I actually this is kind of this. We had a question on Discord that
Yeah.
I read today. That's basically the same thing that I just mentioned. When price gets to that area of point of interest, the person uh, making that question asked, "What do I wait for?" Or I don't know if it was directed to me personally, but what do we wait for? What do we use as confirmation? I don't know. Maybe I can discuss that shortly in a couple of minutes.
Yeah, we can do that. Let me break down my analysis here on gold, and then we can go through this. So basically, what we're watching the same area basically. So I can go first out to the 4 hours. So one idea I had is basically I was looking for shorts if we were getting something like this. Let me. So my initial idea, see if I can zoom in here. My initial idea was that I was looking at shorts if we would get a break and retest of this area. Now we didn't get a break and retest of that area. What I'm looking at is we have that nice 4 hour pin bar ish candle here with a nice wick and closing above the level. This is a fairly interesting level here on the 4 hour, and I'm basically watching. I'm watching this. This is the structure I'm watching, where we keep on testing resistance here, and then we're kind of breaking out, and now we're retesting that level. So what I'm watching is basically a break and retest, and we've just had the break and retest. We had a nice bounce on that level, and I'm thinking right now, unless we break this level. So right now I'm looking for longs, but then if we break this level to the downside, obviously I would want to be switching to shorts. So that's my general idea on a 4 hour, and then I've just added 2 lines here. I just had this one as the low time frame FTA, and then I have an untested area above this one right here, which I think looks like a this is the low time from FTA, and that is the area above that I think if we're gonna get a move, like if I get a good entry on the lower time frames, might enter here and actually exit here. But then there is a possibility of actually coming up and testing this, so we would have a trend that kind of looks like this. That's my general idea looking at the 4 hour. And then if we go down to the 50-minute, you'll see that I have similar areas that I'm watching. So we have a trend line here connecting that low to this low, and then I'm adding the fibs by using this low as the fib anchor to this high. That brings in the reload zone in a very nice area here. And actually at the bottom here, we might have a test of the trend line, and we might actually have a wick perhaps down into the area that you talked about, because this area is one of the areas that you talked about a potential entry, right?
Mm-hmm.
So there is actually confluence here between your analysis and my analysis. We're basically looking at the same level for a potential entry. I think the difference is that I would be able to also, because if you go back to the 4 hour, I've added a small level here. You can see it on like this blue line right there. There is the possibility of me taking a trade around this current area as well, because we do actually have a some sort of support area here as well. So for me, it might actually be possible for me to take a trade here as well up to that level, or maybe even all the way up here.
Okay.
So I guess what we're all right. So that's the exact same setup as John has. That's amazing, awesome, like that. So I think what I need to do is so we now close the 50-minute candle, if we look at the 5 minute, if I have, and we also looks like we almost hit the trend line. How does that look in the 50 minute? Well, I would say that we hit the area around the trend line. It looks like we're hitting it right now. So that's ahead of the trend line. Best case scenario is a wick down into the area that you mentioned, and then a close above here. Like that's the best case scenario. So for me, that would then look like this. That would probably be the trade I'm looking at. Now I would enter that trade, and you will probably enter in a different way. But that's the trade I'm going for. So we actually have confluence here between our two. We have a comment here saying that the background music is disturbing. Maybe let us know in the comment if you want us to keep the music, or if you want that music on. Let us know in the comments.
Is there a background music?
Yeah, there is.
Okay.
Check those ears.
Maybe
gold is at a
since I'm listening through the platform, maybe I'm not getting the same output, output as everyone else.
Okay, here's an advice. Advice from don't play stop loss. Wait for liquidity pool. That one stop loss on. Yeah, I mean this kind of makes sense, and that's why I'm waiting for that wick. You know, I would love to see. Because I know that gold is it's a lot of wicks all over the place. Lots of like this type of price action, right? And I'm thinking it would be cool to have a wick down here and then a close up here. So I would use the low of that wick, or maybe not even the low of the wick and stop loss. But we'll see. That's what I'm currently watching.
By the way, guys, don't forget to hit the like button. The more likes we have, the more counter will be in the giveaway. So don't forget to hit the like buttons. If you want to have bigger chances, hit the like button.
So I wish it would be possible for me to share two applications. So you can just switch between them. That would be really good. Let me see if I can share that one. Application window. This is the account that we're going to be trading on. Check out the spreads, guys. It's so right now on gold we have 13, which is quite good. It's actually very good. It's nothing for gold.
Yeah.
We have on AD CAD 0, AD CHF 0, AD NCD 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0. Well, it kind of goes from between 0 and 2. It's the spreads here is incredibly low.
And
let me open gold here.
When you trade and you do a lot of back testing, you will see the effect the spread can have on certain strategies, on most strategies.
Yeah.
Spread can make or break your strategy. You can have edge, but if the spread is too high, it can take away a big chunk of your edge, and sometimes even take it all away. So having the first step is selecting a broker, in this case a prop firm that offers you those best spread. And the 5ers, you can check that out. You can check out all the other ones. This is, I believe, we have the best spreads there is. It's not a joke.
Definitely.
And so you start with a head start already when you start with zero spread or very, very thin, sharp, razor sharp spreads. Go ahead.
So I'm going to be preparing. So you're going to be seeing my MetaTrader here. I'm going to be preparing for possible entry here. Now you said, so you think stop loss low. We talked about risk, and you said 1% of the account.
Each. Yes. So 1,000.
I think that's too high to begin with. Remember, like
Okay.
we're not usually trading goals. I think we should like this is something we want to do. Like remember, this is something we want to do every Monday, right? We want to see if we can actually grow this account, and we want so
Okay.
maybe we should start slow. So are you thinking that? I mean, you're entering a lot of setups, but you want the total amount of risk for your setups to be 1%?
Yes. I that's what I think. I'm going to. That gives me 10 tries. So that gives me 10 attempts, and because I'm going to be risking. I was thinking if we have a percent, I'm going to be risking $100 per entry. That
Okay.
gives me I can be wrong a couple of times and still have, maybe lose 4, still have 6. I can still be in the market, but I can we can have a lower as well. I don't I think it's good, better to be lower, to under
You
risk
know
than
what?
to over risk.
Let's start with 1%. Let's do that. Let's start with 1%, and then we adjust it depending on what the drawdown looks like. I mean, if obviously if we're very quickly at 5% drawdown, then we got to think about how to set it up. So let's start with 1%. It's going to be
but
interesting.
but what I mean by 1% is, not that we each trade is going to be risking 1%, but that's the maximum of risk allowed for each trader. So you may choose, if you're risking 1% in one trade, and if it goes wrong, that's it. You're done for the day. So
Oh, so
you
we're talking about
understand?
daily. Oh, so we're talking about like today.
Yes, today, like daily
Okay.
allowance for risk. That's the
Daily
limit. So you
allowance for
got,
risk.
yeah. So the 1%, you're not obligated to use all of it. But in my
Okay.
case,
Okay.
I'm going to be risking 0.1% per signal or per entry.
Per
And if I
entry.
if
All
I
right.
lose 10 in a row, I'm out.
Okay, that's good. Okay, so I'm gonna do a 1/4%, 0.25 is what I'm gonna
Yeah.
do. Yes, we're personal. Yeah, exactly. Personal drawdown of 1% per day. I like that. So I'm gonna be doing 0.25. Now let's switch over to trade. All right, so we're well below the level now. If go over to trading view, we are
I'm
well below this area. So now my idea is actually invalidated at this point. Well, it depends on what this 50-minute candle does. But right now, what I'm thinking is my general idea is definitely invalidated.
okay. What I see, if I may put my screen on, this is the 1 minute, and I I don't have rules to. If the signal comes, I will take it. But the way it comes into the area of interest tells me something. If it comes in and there's nothing, there's no buying interest at all, and it goes through it, that's a strong signal that that area may not be the area that I need. Right. So I need to see the price action, what it does in here. And so far, as you can see on the 1 minute, and even if we switch to another, it just looks like there's no interest so far at all. So that is something. It means perhaps I'm not going to take it. Right. So that's actually. Shall I do the question?
Yeah, do the question. Yeah, let me just
Okay.
before we do the question, let me
Okay.
just switch my screen here, and then now look at how I said below this level I'm looking to short. So right now, I mean we do have the 4-hour candle closing in 20 minutes, and now I'm actually starting to think that shorts are back, but it's quite messy. We're trading in an area where, and I'm gonna, if we make that zone a little bit bigger and we kind of adjust it based on the 4-hour, it's a fairly wide zone, and so I would say we're still in support. We're still at support, but I'm not feeling it. And I'm thinking about this comment we had from Henry. Yes, looking at the previous level that I had on, we can go to the line chart, and it's just I mean, this just makes more sense in a line chart. This is the level that I should be looking at in the 4 hour. Can I go short on a break and retest here? Well, it has to be. Actually, I'm not looking at stochastics. I've decided to not include stochastics in this way of trading. But what I'm thinking is, yes, a break and retest kind of makes sense to the downside. But for that to happen, for that, it would be this idea that I talked about previously on my swing trading perspective. It would be this, right? So this is more of a long-term swing trade idea that I'm looking at this actively to perhaps short gold, but that would be on my personal account. Well, maybe I'll take a swing trade, on this account as well, even if it activates outside of the live stream. It would be perhaps interesting to cover that as well. But yeah, I think. What do you think? Are you still looking at?
I think if the viewers are, if you talked about the entry during the streams and the entry happened outside of it, and the viewers can make that connection next time we are on, and you say, this is what we talked about, and this is why you took it, and this is why it worked or it didn't work. I think if they can make that connection, I think it's okay to take outside of the stream, because that you're they know why you took it, right? So it's part, even though you took the entry outside, because let's be honest, the time we're going to be on the stream is only a fraction of the daily the time we have on a given day.
Yeah, I mean, the idea here with these Monday Gold live stream is to basically, trade one account here together and get the setups on the chart, and then break down the set. And it's very interesting to kind of because the audience and the viewers, they will be able to follow this chart and follow the setups and all of our thinking process with one pair. And that's my goal here with this experiment, is to make sure that. Because sometimes we're all over the place. We're on this pair and that pair and this and that, and it's difficult for the viewers to follow along the thought process, basically. But yeah, I mean, we're getting a bullish reaction here. I mean, if this turns into a bullish candle, I'm buying. Definitely buying.
Okay. I will show my. I'm showing my, you see, this is the reaction that I was hoping to see. We got some buying interest, right? It's a bullish engulfing on the 1 minute. If you go to the 3 minute, you have that little pin bar. And depending on how this ends closes in the next almost 2 minutes, you can see if it closes as an engulfing or with a big green candle, that will constitute a buying interest. But as you can see, you cannot assume that's going to happen just because it's showing it. It has to print it. So if you're too eager, I would have entered thinking, okay, this is the sign. No, that's not the sign. Wait for the market.
That's a very, very important point right there you're making. Like, if you're too impatient and you're only trading, what might be a bullish candle, but it's not closing it. Like, that's I think that's very important. You wait for the actual candle to close.
Mm-hmm. I've made that mistake so many times, where I see something and you think I should get in now, because by the time it closes, it's going to be much higher, and that's FOMO basically. So I'm gonna get in time beforehand, before it closes, but by the time it closes, the candle is not there anymore. There's nothing bullish, anything, and you entered on nothing, on a ghost, really. So that's something I think is useful for others to take into account, right? So we have on the 5 minutes, we don't have anything yet. On the 3 minutes, we don't have anything yet.
Let me show. Never trust a moving candle. I'm gonna remember that, Susan. Never trust a moving candle. That is a favorite. Can't believe I have never heard that before. I'm gonna tattoo that to my forehead. Or I'm gonna I'm gonna name my second kid after that comment. I'm gonna name him Moving Candle. Right. That's a very bad joke. All right. So gold, we did close the 50-minute. That's a terrible. Yeah, my second kit is going to be called Moving Candle. The third one is going to be called Bullish, and the fourth one Engulfing. The fifth one is going to call I Waited for Confirmation. Good. Okay, so now the 15-minute. Yeah, I mean the 15-minute close. It's horrible.
Yeah, but I do see some good things on the lower time frames. Look at the 3. We have like a little order block here. So that doesn't mean it's gonna totally reverse from here, but that's something you want to see. Well, you see that's the answer right there. But you want to see buyers come in a little bit and overcoming the sellers, and that's what the order block is. That doesn't mean this is a signal to go long yet, but it's just the market telling you, okay, you're getting into the area, and the buyers seem to have come to the market. But as you can see, the reaction is it's breaking this right away. So that's a bearish sign, right? If it forms something, even if it's a little bullish sign, and it breaks it very quickly, that tells you who is in control, right? So the formation and the invalidation of an order block tells you right away, what the market wants to do.
So what time frame are we waiting for confirmations? I think 50 minutes, right? Well, at least I guess it's not about time frame. It's about more structure that kind of goes through. For me,
Yeah.
it's the structure, the price, and right now the structure I'm watching is on the 15 minutes. So, I mean, yeah, I think at this point I would like to see something on the 15 minutes. But it's not really about time frame. It's more about what. Well, now I'm watching your screen on the 1 minute. That looks good.
Yeah, it does look good.
1 minute does look good. All right, so maybe.
Yeah. Okay, I'm going to put in an order.
Yeah, this is good.
But I need to wait for it to close, right? Remember our good friend who advised us, what was it? Moving candle. So we need to wait for that moving candle to be printed. Who was it? Baron Sigma. No, it wasn't Baron Sigma. It was Susan McLeod, right? That was a great advice.
Yeah.
Okay, so let's look. I haven't put the trade in yet. I'm waiting for that candle to close.
That 5 minute candle looks bad.
It's not closed yet, so I refrain from say anything about it. But there's a little
moving
pause.
Candle. Can't trust that moving candle. Always lying and cheating. Better talk to Bullish Engulfing.
Okay. In terms of quasi, I don't have a quasi in here, so I don't have anything to say about. I mean, I don't have a signal here, and actually, I shouldn't say signal because I'm not going to be trading the usual way. I'm going to be reading on the fly price action and acting upon it. So this is not my typical way of I trade. Actually, we should repeat, right? We are trading the same account, guys, but that is not allowed if you have a challenge account with the 5ers. One of the rules is no group coordination in trading. So you cannot trade the same account. That will cause you a violation and you will lose the account. We're doing this just to make it for educational purposes and make it easier, so we're trading the same account, right? Because the idea is we're going to trade this every Monday or every time we do these sessions. So we want to have continuity in one account, and that's why we chose that. But this is not, do not do this if you are, if you have a group of friends, do not trade the same accounts. All right, I like that. I like that. I'm liking this price action. If you
Yeah.
look at the 3, see how it formed the order block. It violated, it squeezed it. It didn't invalidate it, but it closed above it. Right, that's the reaction you want to see.
Wait, did you say
And then in the next
violate?
one,
Is that actually something you're used to, like trading term? Violated?
yeah, actually yes, but it's used loosely. Like it can mean different things for different people. So I try not to.
Yeah.
What I use is invalidate or uh, break, but invalidate I think is better.
Okay, so
So
I'm
what
now
I
looking at. Yeah, have you entered any orders? No, you haven't.
no, I haven't. I'm waiting for. I'm waiting. Let me see.
Let me just switch over to my screen quickly. So what I'm watching right now is I have a level here on the 1 minute, and I'm going to be looking at a break and retest here of this level. So this, I think this is what I'm going to be watching now. The spread is I have to double check this because I'm not used to trading gold, but the spread is it's nothing. Wow.
What is it?
14, so it's like barely visible on the 1 minute. Okay, is that right? Is this the size of the spread?
Let me check. 13, yes.
Wow, that's very
No,
tight.
but what are you? Yeah, it is. Yeah. For some reason, I'm not allowed to take the. Oh, I see already what it is. Great. Okay.
Is it the algo trading?
Yeah, I'm trying to. I think. I'm still getting some.
No, Alex
you know what?
Alex should have talked to, like, he probably talked to the risk department about this. So hopefully we don't want to get it won't get shut down when.
No, I got it. It was my fault. Nothing wrong with
Okay.
with the account. Okay, I got an entry in. It's not. I don't like it very much, but it is. It's okay. It's okay.
Yeah, Alex is in the back end copying our trades to his personal account probably. So I think this is now a pretty good reaction. I think yeah, this is not. This is really not how I'm should be trading, but I like that. So I'm actually going to be opening. We could open a small position here. You have a position open already. That's nice. So you got one.
Oh, you can see my screen. Of course, we're trading the same account. You can see my positions.
Yeah,
I forgot that.
Yeah, we have the same stop loss as well. So,
Really?
Yeah. I think.
All right, got one position in. It's moving nicely, but it's too little information still. I think I got enough to enter, but I would like to see like the same thing we saw on the 3 minute. I'll show my screen. The same thing we saw on the 3 minute, right? We had the formation of the order block. It went and squeezed it. That's the correct term to me. That's what I used. It squeezed it. It didn't invalidate the order block on the 3 minute. And then in the next candle, it went down there, interacted, and then left a wick. To me, that's the sign. That's the market telling me it's rejecting this order block and it's going the other way. Or at least that's what I read into it. And that's the next candle, it shoots up. So that makes a lot of sense on the 3 minutes. If I look on the 1 minute, we left an order block here that could be something that market could come back to interact with. So that would be nice to see if that were to happen. If it were to happen, I want to enter another one here, or something after it interacted with it. If it comes back and shows me some kind of a rejection in terms of candlestick, then I want to be part of that. Other than that, what I want to see too is I want to see on more than one time frame, because on the 3 minute it looks good. On the 1 minute it looks there's actually a quasi here, but on the 5 minute there's nothing yet. Well, the market doesn't tell the same story in all time frames. So that's one thing I need to understand. But it needs to tell me in more than one, or at least it's better when it does. So on 1 and 3 minute, it tells me we may reverse from here. Now I want to see that either on the 5 minute or in the 50 minute, for example, for it to close as an engulfing. If it does that in 4 minutes, that's a very good sign. And then I can wait for the retracement. Let's assume it does that. I can wait for the retracement and we can get another entry as it moves out. Right, so I'm going to leave both of them open and try to catch that reversal that it may do based on the 30 minutes, that 30-minute order block that I identified earlier. Now, if it fails to close as an engulfing, doesn't mean the trade is going to fail. But at some point, it needs to start giving you that bullish order flow on the other time frames as well. The 15 minutes, the 30 minutes, the 45 minutes, 20 minutes, whatever minutes you want. But it needs to start doing it, because that's the indication that the market is switching direction, right? And it needs to switch to those higher time frame and tell the same story that we are reading on the lower time frame. Tell it as well on the higher time frames. And
so you can see right now, guys, yeah, go ahead. You were
the H1 is leaving that wick behind. I'm already in. And what I want to see is we still have 2 minutes and 51 seconds for this hourly candle to close. What I want to see is that it leaves a wick behind. And in the next hour, it ideally closes as an engulfing, or even if it doesn't, a good size bullish bar, right? So, but that's something for 60 minutes from now. Now we're still just focusing on this area and see what it does.
Yeah, it looks very good. So you can see right now, guys, you can see that I'm around -$5, and Victor is up $30 already. I have my position size is actually almost double his. But I had a much later entry than, so Victor entered on that candle, I entered on the next candle. Now the idea here is, for me, is if you look at you look at the 1 minute here, you can see our stop losses is actually in the same area. Now what I'm looking for is I might actually enter.
I'm going to interrupt you, Jonathan. The 1 hour candle is going to close in 1 minute and 28 seconds. Okay, let's look at how this affects the price action. That is something that is only going to happen each 1 hour. So let's look at what it will do in this candle and the next one. Usually, it will have, like, before the candle close, it will have a reaction, or right after. And you can see, and that's the importance of the time. It's not only price, it's also time, because apparently, traders make decisions, or perhaps algorithm, I don't know, based on time, and that can give you a clue as to what is the market trying to do. So we have 47 seconds. Let's look at how it closes. If it looks very bullish all the hour, but in the last couple of minutes, it retraces and ends, takes away that bullishness, that's, to me, like, that's the sign that the buyers are not really in firm control. If before the hour closes, it shoots up, like right 1 minute before, or even a few minutes after the close of the H1, that tells me that, buyers are eagerly, they want to get in. So the reaction of price in the next 5 seconds, the reaction of price before it closes, to me tells me something. And in this case, it wasn't very telling. It didn't say much, right? This candle, maybe if it reacts now in the next minute, it might say something, but it doesn't happen all the time. Of course, it's not that, at
Can you talk a little bit about
H1.
yeah? Can you talk a little bit about your take profit target, because I see that your take profit target is much higher than mine. So what did you choose that level?
No, and this the trade the TP is based right now only on the daily ATR. So because
Okay.
I don't have, I know because my entry is on the lower time frames, I don't have to worry too much with my TP yet. And I've checked on the H4. I don't have a target, right? I don't have actually, we already have, we just formed a bearish order block on the H4. That's not a good sign. All right, so that makes me reconsider. Perhaps I should reconsider a little bit my setup. So it's okay. Doesn't mean I'm gonna throw everything out the window yet, but this is something we should not ignore. Right, just close a bearish one after another. So that tells me that maybe it's going to range for a little while, or maybe it is going to go much lower, right? So it's on the fly that I read the price action, and that guide me towards being more bullish, less bullish, or even bearish in this case. So if the price action switches, we should be flexible to, not get stuck with the first impression that it gives. So now that this forms, I'm eager to go to the lower time frames. I'm eager to short this here, right? Because I have an H4 telling me that there's a chance it might go. So, and that brings me back to the TP. Now I have a reason to say, okay, maybe this is a good area to take off my profits, because I have another scenario which tells me that perhaps it might reverse from this area, right? Come back and reverse, right? So that tells me, if that is the case, then I don't want to be targeting anything above me. But
that's my TP right there.
Oh, okay. See that? Why? The other thing is, I put it at the daily ATR because I don't have a structure yet, and I'm fine with that because it doesn't matter. I don't have to be in the trade the whole day, but I can look for the TP later. I know that it will, and if I can't find anything, I will just target the last swing high or this order block here on the 2-hour. I can find the TP. That's not a problem. It's reading the market that I'm more focused on, right? The TP, usually I have the TP right away, but sometimes it's not very clear what I should be targeting. It's also about how long do I intend to hold the trade. If this is like something only for a little while, then I don't want to be targeting something very far away. I'm going to be targeting perhaps this order block, like anything in here. I go to the lower time frames and try to find perhaps this, right? If I'm going to, that could be like an order block. That's an area where price could bounce off, and then I could target this, for example. But it depends on how long do I want to hold the price. Hold the trade. Right now,
we're both in profits, and if we look at the 1 minute here, I absolutely love the structure right here. This is a very good looking higher low. If we can break the structure right here, then we are golden. I got my TP up here, so I'll make is that my TP? Is that $500? Oh wow, I must have risked way more than I should have. No, that's right. It's a 100K account. 0.25% is 250.
Yeah, yours. That's your TP. That's not mine.
Yeah. So right now looking good. It's looking good,
half a
guys.
percent.
If you do like this type of content where we're trading, basically trading the same pair throughout the whole session, and we're kind of like walking you through all our decision making here, and we're trying to grow this account together. You know, combining forces. If you like this type of content, make sure that you hit the like button. It's very, very important that you actually do hit that like button if you like what you're doing, because the Golden Monday. Yeah, Golden Monday is a great, actually great. Maybe we'll bring that into the title next Monday.
Yeah.
So yeah,
That's a very good one.
also like the video, of course, because that's also going to be determining how many accounts that we're going to give away as well. And also, Alex is, as we speak, sending out emails to giveaway participants, asking you to fill out a quick form. It's basically a form asking for some feedback on the live trading show, on the giveaway and the content and everything. So when you do get an email from Alex, it would be highly, highly appreciated if you can go in and fill out that form with any suggestions or any feedback or whatever. Because remember, we're doing this for you guys. I want to make sure that we would deliver the content that you guys want to see. This is so far looking really good. So let's talk about trade management. So how are we? I think for me, what I would be looking at is I would soon, like the next breaking retest or the next higher low, I would be starting to think about, because like we have our entry around this higher low, and I'm also watching that, and I'm seeing maybe this is a good invalidation level. Maybe this is a level where we could sometime in the next hour or so move our stop loss to. Like how are you approaching the trade management?
I don't. No,
So
that's not
you
true.
don't manage to
Of
trade.
course, no, I try not to touch the trade too much, or my in my experience, at least to me, the majority of the success of the trade is in identifying the structure correctly and identifying the reversals in the markets on the lower time frames and getting in on a good price and having your stop adequately as tight as possible, but not too tight. And after my entry, I look at the time we still have in the session, news coming up, and I look for the structures that could be a problem, so FTA, right? And I decide either I'm going to wait for it to reach that, or and then I'm gonna be closing it. But if I see like a lot of bullish order flow, I might expand my TPs, thinking, of course, if it's okay with the ATR, thinking that this could be much more than just a pop, just an upswing. But in terms of taking it off halfway because I saw something, or because it's stalling, it's decelerating, or no, I try not to touch the trade. I prefer being wrong than to cut things short. So I prefer to let them run, and if I'm right, I'm going to be right. That's it. Not touch it too much. Usually, the more
That's a good comment right there. You said that you prefer to be wrong instead of cutting it early. I think that's very important.
Because if I got in at the right place, and it takes me stop loss, then I was wrong all along, and I prefer to have that as the market telling me that I'm wrong, that I start to double guessing my entry by cutting it like a quarter of the distance to the TP or things like that. To me, that's you're handicapping yourself. But that's me. That doesn't have to be the same for everyone. Maybe you or anyone else has a validated way of trading. For example, I don't trail my trades because I try different ways to trail, and what I saw was that it was better for me to just let them run and reach my TP than to trail, because I think at least trading was let me felt good because I at a certain moment the trail will put you in profit while the trade is still open, and that gives you satisfaction, security, and all of that. But in the end, when I compare the results of the trailings, all the methods I took, it was better for me to just let it hit my TP and adjust my TP, not trail it too much. So I let my stop loss there. If I'm wrong, that's fine. I accept that before I enter. So I'm not gonna get emotional. I'm not gonna get angry. I'm either gonna be right or wrong. That's fine. I don't mind. So
No,
yeah.
I
So
think
I don't manage it. I don't manage like micromanage it anymore. And it frees up a lot of energy. I
yeah.
can spend it in doing other stuff like looking for the next entry, maybe look for I don't know, something else, instead of be so focused with the price, right? Should I when do I put BE, is this enough to abort the trade? No, I don't do that unless there's something like news or some other external factor that makes me that I have no other choice.
Yeah, no, I think that's very important because we have man, I forget what I was saying. Yeah, so we also have had a question on that, like how to deal with fear when in a drawdown, and that's it. You for me, like in the past I did a lot of micromanaging, and like I could enter a trade and then I could spend a whole day just micromanaging that trade and like having multiple other opportunities on other pairs just disappear because I was so focused on just micromanaging this trade. So yeah, like you can take that energy and spend it on something else, because like if you have a setup, you have a plan, and you have entry, you have stop loss, and you have TP. Like if you're in the trade, then let that plan play out. Otherwise, and if you're not going to let that plan play out, at least have a very specific plan for how to micromanage the trade, right? So before you enter the trade, you say like, oh, when there's if you go long, for example, so you can take this example here. So if there's a higher low, again, I'm going to move stop loss to that below that higher low. And then you do that every time. And then you evaluate if that's a good idea or not.
The thing is, I come to this all the time. When you enter, I ask myself, is this the entry according to the plan? A plan that I've tested, that is validated by more testing, by forward testing, etc. If it is, then that's my job. That's my entry. And then the second question is my stop loss at the place that is according to the plan? Is the stop loss based on my data that I got from back testing, from forward testing, etc.? If it is, then it's fine. That is my stop loss. And the same goes with my TP. If the TP that I put in when I entered is based on my data, then why am I self-doubting it? Because the second question is, did I micromanage my trade during my backtesting? I don't think you do that, right? You don't do that. You put it in and you see it hit TP or not, or you may have some trade management for your backtesting, but I didn't in any case. So if I didn't do that in the backtesting and I want the same results that I got my backtesting, then I should be doing the same. If I didn't micromanage it on my backtesting, then I should micromanage it going forward. That's how I see it. Of course, there are times where I deviate from my trade plan, and that is because there's news coming up. I don't want to take the risk. I don't want the slippage of news. I don't want I allow myself some deviation, but the core concept is the same. If I didn't do it in backtesting, I shouldn't be doing it in live trading and forward testing. That's how I see it.
I have a question here from a Bluebird, which says, can I buy from here stop loss 23.19 and TP 23.63? So it's the setup that I have on screen here, and I would say that if you go to the 4 hour, I would say that it's actually not a bad trade. It's not a bad trade. I would say probably TP would have to be lower if I would take a trade like this. If it's one thing I would probably say is probably place the TP a bit lower, maybe below this level. So
80%.
front
No, because
80%
that
what?
63 is the daily ATR. So
Oh,
that's
okay.
100% ATR, and that's fine.
Ah,
But I think the 100% is the average. It doesn't. 50% of the time it exceeds the average, and 50% of the time it doesn't reach the average. So you don't
all
want it
right.
to be very close and not reach your average. You want to be, you want to hit that TP more often than not. So you have to be less than 100%, unless you expect some kind of news, and you think, okay, this is going to explode, and then you can even target more than 100% ATR. But
But let me and important comment here on this is the fact that if uh, and I don't mean this to sound rude or anything, but if you have to go on a live stream and ask for advice, you're doing something wrong. If you have to ask for like, is this a good trade to take, and you're actually about to take that trade, then that's actually, that means that you're not confident in your analysis, and you're probably not trading a system where you have statistics and data to back up your profitability. Now, of course, if you're asking this just to get advice on and your analysis, and then for educational purposes, then absolutely, but by all means, it's a good thing to do. But if you're going to take this trade, and you're taking the trade, and you're adjusting TP just because I said you should do that, then you're doing it the wrong way. When you're actually trading, when you start trading, you shouldn't follow anyone or take advice from anyone. You should just go straight into your system and trade just the way that you think you should be trading, and then reevaluate those trades after the fact. Otherwise, you don't really know why I think this is the best TP. Like, first of all, I wouldn't take this trade, but if I had to take this trade at this very moment, that's the TP I should place. But I would probably have a TP, stop loss down here, stuff like that. I don't know. Actually, I was thinking to have that TP on the trade that we have open currently as well,
63,
because
63.
yeah, that would be
Yeah,
amazing.
the order flow on the 1 minute changed. So
Yeah,
there's that. It formed now a quasi. You don't want to see that, but that doesn't mean anything. And right as we are speaking, it is changing completely. So that's good, right?
yeah,
I'm waiting.
yeah,
Let me show me this. It was at that moment it formed this quasi. You see this? That's
yeah.
the left shoulder, the head, and now it broke the neckline, and hopefully it doesn't
I'm just
go
gonna be back
to do
in.
this.
I'm just gonna be back in a minute. Okay.
I'm gonna do the question on the Discord question.
Yeah, do the
submitted
question.
in the
I'll
meantime.
be back in a minute.
Yeah. All right. We have on Discord, guys. We have a section. If you are part of our community on Discord, you can. There is a section, among other things, among other benefit, has. We have a great. I have to introduce a little bit. We have a great community of other traders, fellow traders, who are there to help each other. And I'm a moderator there. So if you need advice, if you need help with anything, there's also a support channel where you can actually, if you want to have contact with the firm, but if you want to have like other advices or tips on how to do certain things, we have a great community in that, and I believe it's one of the best one, if not the best one. But in there we have a section called submission section. I think it's called, let me check before I say something that is not correct. It's the in the section break room, you have a section where you can submit your trading questions and your setups. And what we will do is we will pick them out and discuss them on this YouTube session. So that is what I'm going to do. In the meantime that the trade is playing out, I'm going to go to the question. We have a question here of, let me see, this is the question we have. Let me open this up a little bit more. I hope you guys can see that. Ayrton M, thank you for this question. Asked, I trade supply demand levels, and I have been using limit orders till now, but the strategy doesn't work very well on range markets. Lately, the markets aren't moving much, and I'm struggling with limit orders. Try to wait for confirmation of smaller time frame, but when I zoom in, it's either going to be too late to enter, or on very small time frame, price will range at a level, then move. How do you guys trade support and demand zones, or supply and demand zones, or support and resistance? What kind of price confirmation do you use when price reaches your level? I think this is very essential, a very basic question that I think you should get right from the beginning, because otherwise, and I mean this in general. Thank you for the question. So let's see. We have it's the same way with what I did, right? Once I have what I did was I identified an area. In this case, I know there are a lot of order blocks here, right? But I identified this order block as being, and I have different reasons for that, which I may not go into detail right now. But one of the things that I did was once I identified the area, I tried to refine it, right? So I use different time frames.
Holy shit, look at gold. Yes. It's breaking out. Sorry for interrupting, but yeah, gold is looking very good.
And I go to the different time frame and to see which time frame gives me the same story. And the H2 does tell me the same, but it's too wide. The refinement comes from the 1 hour. And when I see that top-down analysis and I confirm the area well. So the first thing is you need to have a like confluence in that level, right? So identify the one that has the best probability of market reacting to. That's the first thing. But once you have that, and this is where the question comes in, what do you do? Do you put a limit order at that area? Personally, I've tried doing limit orders and it hasn't served me well. Maybe it's because my stops are very tight. That could be the case. So I don't mean to say that it's never a good idea to put limit orders, but I tried it and I couldn't. I found that it was much better if I go to the lower time frames and do exactly as I did in front of you guys, right? So what did I do? I went from the 30 minutes. That's the time frame. I had the H4, the H1, the 30-minute telling me that this area was a great area to buy. Then I went to the lower time frames and I didn't see anything on the 5. And on the 3, I had an order block, right? So I look for other indication on the lower time frames, and that can be a pattern, right? A reversal pattern, or it can be a candlestick combination, right? An engulfing, an outside bar, or a pin bar. So that's my confirmation comes from the lower time frame forming a candlestick pattern or a chart pattern, right? As in a quasi, a head and shoulder, etc. And that is how I deal with it. So I don't put a limit order. I read the market on the lower time frames and I enter, but I know that this whole area can still be tested. So I have to make a choice. Where do I put my stop? Do I put my stop below that lowest low, or do I put my stop below the area? That is something that I cannot tell you what to do, right? I'm here to, show you how I do it. But if I were to help you, I would say what you need to do is you need to figure out what works best for your strategy. And one way to do it is like this. If you have the areas, right? You identify in advance. Okay. Go back and look, replay how price, so you don't trade them, just observe. Go back look how price reacted to them, right? When they did work. All right. So, of course, the times that they fail, um, that can also be learning, can be helpful to give you ideas, but especially when they do work, right? So, go back and try to see, okay, what can I see? What what do I see when that happens? What is there any some is there a pattern there? Something that keeps on showing, price keeps on showing before it actually reverses. And that can be a reversal pattern. It can be a candlestick, as I said, one of those things. And you have to see that let's say you have 20 of those areas that work, go back, replay them, and try to reverse engineer how price behaved as it did what you wanted it to do, right? And once you do that, you start to, okay, what rule can I apply that will help me catch those moves? Okay, so that's the advice I would tell you. So it's not about one single thing that works for me or for someone else. It's actually you have to build that eye for that price action when it comes to your area to read that price action, right? So tape reading, and once you don't have to do that all the time, but when you're building your system, I think is a good way to do it. Takes a lot of work, but that's how it goes. That's how I know how to do it, right? So you go back and reverse engineer it. You look for those things, those behavior, those candlestick, those patterns that a price gave you, the hints it gave you before it actually turned around and moved to your TP. Once you have them, you try to build rules that will help you capture that. And once you have all that, you go to the back testing. You apply back testing. You try it on a different time period. You do the demo testing, forward testing, all that trajectory testing until you get enough data, and then you can apply it in real time. So I think that's the answer to that question.
Awesome.
All right, let's look at
good stuff.
I think it's very important, because otherwise, if you don't go about it, what I just mentioned about it methodically, what will happen is you will waste time running around in circles, because sometimes it will not work, other times it will work, and you'll say at the times it works, you say, okay, I'm gonna use it the next time, and the times it doesn't work, you say, maybe I shouldn't use it. But that's gonna be, you're just running around in circles. You should go get good data and then apply it. Apply it not on the first period only, but if it gives you good results on one data set, apply it to a different data set, a different month, a different year, a different period. If it gives you the same results, that's a good sign. That means that what you're actually measuring, the edge that you're measuring there, it's actually there. And that's the sign that you've got something, right? So, and then you go to forward testing, etc., etc. So, but that's the process. And I don't see any other way of doing it. And that's what you want to be, right? You want to be an independent trader, right? You want to be able to figure this out on your own, to have that ability to know how to assess if there's edge in an idea or not, right?
Yeah.
And you don't want to depend on anyone for that, because it's not in a good position if you can't find edge yourself. So
I'm
okay.
yeah, definitely, I agree with that. And you said, be independent, very, very important to be able to be independent. And I think for a lot of people, they it's when you reach that level where you actually become independent as a trader, and you focus on what you're doing in your system, and you're trying to improve everything that you're doing, then that's when it kind of start clicking.
Gold is going up.
Gold is going up. It looks very good. We are now currently up 0.1% on the account, which is better than not being in profits. Yeah, better than last time. Last Wednesday we've already lost the account at this point. No, but I think this could be a very exciting Exciting. Yeah, and I gotta agree with this comment here from Luke. Your advice, Victor, is always very
Thank you.
very good.
Uh,
I like the way you're explaining everything in great detail, which is very very good.
I
Um,
we were saying that you think this format of trading live is good. I like it too because like Wednesday is fun. I enjoyed it,
yeah.
even though we did a very poor job in managing risk and we did do well there, but I enjoyed it very much because it was competition. We were chatting and that's very entertaining. I enjoyed. I think the viewers enjoyed it as well. But I don't think it's a reflection of serious trading. So
No.
I think this is how I trade, even though it's not my strategy. It's using the same concept and the same kind of idea, and this is actually, even though it may sound less entertaining because we're waiting, we're patient, etc., etc. It's very educational. I would have wished when I was learning to trade that I could see someone who is actually a trader, who is genuinely a trader, a funded trader, to let me sit next to him, and I can see what he does. Right?
Yeah.
It's that's very well, that's my opinion. I think it's very valuable for a trader that is still looking for his or her place in this trading space. So, and
We
gold is shooting up.
Yeah, looking very, very good here. I think, I mean, if this hits my TP, we are up. My trade would be 0.5%. Your TP, are you? Did you say that your is that your TP, or the TP you have set? Is
Um,
that your TP?
I think I will take it off. I will not go for my full TP because of the H4 order block that was just formed.
Yeah. Yeah. Okay.
If if it
Oh, so
if it if it starts forming like H1, H2 order blocks or give me like outside bars, then I might think, okay, this might form a back to back order block. So after it forms a bearish order block, forms a right away forms a bullish, like a like a combination where it tricks everyone and forms a bullish afterwards. If
mm,
that happens, then this can shoot up much more. But I need to have like more indication that that could happen, and I don't have that yet. So I'm not gonna get greedy. I'm gonna cut this probably at the same place as you will, or somewhere around that.
yeah, I think that looks good. It's definitely the safer play, and I mean, we on the account, it would mean that we're up about 0.75% if both our trades hit TP, and that creates a very very good cushion for going into continuing this next week. And we're doing this. Also, one thing we really have to remember is we're doing this on a high stakes account, which is the first time for me. I've never traded the high stakes. I only traded hyper growth. So high stakes is we can't trade through news. So you got to remember that.
Yeah, there's something I want to show. On the 30 minutes, we formed 4 minutes ago, 3 minutes and 30 seconds ago, we formed a bullish engulfing on the 30 minutes, which was the time frame that gave me this, that confirmed, or there was confluence confirming the H1 as well. So to me, when the market is telling me an order block, right, like this one is here, and it's actually reacting in the same time frame, forming another one, to me, that's for today, that's the frequency at which the market is, producing the tape, as in tape reading, right? It sometimes on one time frame, let's say sometimes on the H3, it forms the structures nicely. And if that is the case, then I tend to, want to read the H3, because perhaps on other time frames it's not showing the same price action. So I tend to, if the fact that it just formed a bullish engulfing on the 30 minute, even though that's not everything, I can still be stopped out. but it's a good sign. And let's see if it keeps on keeps on closing. Ideally, I would want this to close as an engulfing on the H1. If I go to the 45-minute, that's a nice candle, but it hasn't hasn't undone the that big red candle. So yeah, there probably could be a retrace from here, and if it does happen, I will be ready to see if if it stops me out, to see if there's another reversal, because sometimes it can do this before it actually goes right. So I that's why I like to have my risk per trade very low, because if I'm wrong, I can catch it again. If it does show me its hand maybe here or maybe there, I can catch it again and again, and it doesn't matter. I just have to catch it once or two trades in, and that's enough for me to, to be profitable.
All right, guys. So I'm preparing the giveaway. So make sure that you like the live stream in about 10 minutes. I'll send out the link and everything. So I'll be preparing that shortly. So make sure that the winners. The winners from last week should all be getting an email. If you have not been getting an email, then you have not won, basically. And we went through all of this last week on Wednesday. See if I have any questions to go through. This is a good question. So how do you cope trading multiple pairs? Yeah, so I've always traded multiple pairs. So the way I have is I have a quite structured approach to this. I have in this list I have 39 pairs. It's all the majors and minors, forex pairs, and all the crosses between them, including gold, silver, and the indices, S&P 500, US 100. Well, actually, isn't US 100 and NAS the why do I have both NAS 100 USD and USD 100? That makes not a lot of sense. Shouldn't have both of these. Anyway, so I have a quite structured approach where I'm going through the markets every weekend, and I divide them up. So I start with having everything on list number 3, and then I move the basically the ones where there's setup, I move to list number 1, and then I add alerts on all of these. And whenever there's whenever the alerts goes off, I go to that one and I see if price is following my idea from the weekend. And it's easy to it's easy to cover all of these pairs when you have a structured approach and you basically swing trade. When there's like this is easier said than done. But it's actually a good question, and I think for part-time trading, or the way I'm trading is, I think the way I'm trading is great for trading part-time. Just you look at high time frame levels, and then you add alerts at those high time frame levels, and you wait for something like a 4-hour bullish engulfing candle, and obviously that candle will close every 4 hours, so it's easy to plan your day around the 4-hour candle. I think that's the way I would do it. Maybe I'll have a session on that someday. What's gold doing now? Gold. Well, it's not looking too bad. I mean, still, if it goes below this low, then yeah, we might have a problem, but yeah, okay. Yeah, I shouldn't have said that. This is now not looking
it's
great.
Falling very hard.
Yep. That is a
That's fine.
terrible. That's not fine. This is not the definition of fine. No, this is not fine. Let's pump it up. And actually, I had a great idea for that. We are. Wait. I have to check these. I got some alerts here, so it's gotta check these. CAD CHF, EDUSD, Euro NCD. All right, so Euro NCD is actually okay. Looking good. Right, so I have an idea on how we might get gold moving. So what we're gonna do is link. I will be sending the giveaway link, so make sure you hit the likes because I'm gonna let Alex draw winners based on the number of likes. And right now we have 645, which means we are going to give away 6 accounts. If you can get that number up to 700, then we're going to give away 7 accounts. And this is the link, and the secret word is gold. So you can find the link in the comment section. I'm pinning the link. So you go to that link and then you type in gold, not in the chat. You don't have to put gold in the comments. So you have to go to that link and type gold. You don't have to type it in the comments.
Okay, this is looking bad. It's breaking all the structures, all the order blocks. So it has to react now, or it will probably break everything and it will stop me out.
Oh, wow. Holy shit, look at that. That's insane. Everything looked so good. Look at the 1 minute. This is terrible.
Yeah, that's some heavy selling there. There's even an outside bar on the 1 minute. Oh, and there we go.
Wow. Okay, we're out.
Yep. Yeah. It's stopping out.
What the hell just happened? What is this? Do we have news? Or is this just normal gold? You know, I think, you know, we get 2 comments here. What this makes no sense. What's going on here? Like, this has to be news, right?
I don't know. Maybe gold is can get a little wiki, and that's because it hasn't. To me, it hasn't invalidated the order block yet, right? It can still close above and then, you know, form a reversal lower and push higher. So if that is the case, then the setup isn't invalidated until it closes on the 30 minutes below that order block, or on the hourly below the hourly order block. So to me, this is just squeezing, although it looks very bearish. And remember when we saw the H4 form a new order block, the bearish one, and I said that's not supposed to happen, right? Because it shouldn't be doing that, but it's still young, so we can still wait to see if the price action reverses from a lower point. But if it doesn't, we shouldn't be stubborn. If it wants to go down, we need to, you know, switch biases and go with it. At least that's how I approach the market. Yeah, so that reversal pattern did work, but that wasn't the reversal of the whole area. So
right, so let's look at NAS. What's happening with ooh. Okay. So what happens? What happened here? Right, so let's look at the DXY. Yeah, okay. So we're getting that push to the upside. There's definitely some USD strength coming in here. Where is that coming from? This is insane. I understand now where there's a lot of people saying like gold. Gold is nasty. Look at that. Look at that wick. That's just insane. How are we supposed to be trading gold with all of these insane wicks like this?
I think that comes with the territory, right? People like gold because it's very volatile, but for the same reason, it has a bigger chance of wicking and squeezing than otherwise. So you can't have it both ways, right? You can't have it shoot up big numbers, be very volatile in your favor, and not wick you out as well. That comes with the territory. So yeah, I think the best way to do that would be to adjust your stop losses based on that fact.
Guys, so if you want to get in on the giveaway, you have to go to the link in the pinned comments. So in the chat, in the live chat, in the pinned comments, you go to that. You click the Gleam link and you put in the secret word being gold. If you want to get in on the giveaway, you need to like the video and do that right now, because we are about to draw the winners shortly. All right, looks like Alex is in the background here in our streaming. Let's see, he's gonna get himself on if he wants to. All right, so you're not supposed to be putting gold in the chat. You're actually supposed to be doing it in the. All right, it says that the link is not working. The link should be working. The link should be working. Yeah, it seems to be working. There's nothing seems to be nothing wrong with the link. So you make sure that you go into the link is working. Go into the link in the pinned comment section and like the video. Use gold to get on. All right, so it seems like Alex is withdrawing the winners right now, and we're going to be selecting 6 winners. All right, let's do this. No, not 6,000. We should do 6 winners, not 6,000. 80? We do 80 winners. No, we're not going to do 80 winners. We're going to do 6. Oh, one. Is that 1 million? Yeah, we're rather 1 million winners. So I'm not sure if it's drunk or whatever he's doing. Oh, 6. That's good. All right, we got let's do it. Sofian, Sagar R, Joshua S, Raphael M, Abehe O. Yeah, the last one. Let's try that one. Potheshet P. I'm sorry about that last one. Don't kill me. Congrats, guys. Those are the winners of today's giveaway. Congrats, guys. Congrats. If you did not win today, then we'll have another giveaway for you guys tomorrow. All right, guys. So if you liked, we can put that on here so it's actually everyone understands who won. Okay, so tomorrow, I know that you guys, Victor, he talked a little bit about his risk management, and he when we were planning the risk management for, holy shit, man, look at that gold, look at gold.
Yeah, I didn't want to interrupt you, but I entered 2 trades as it start forming bullish order flow again, because as I mentioned, this is purely on price action, right? We know that it only made one dip, if you will, and reversed from that. On the lower time frame, we saw it on the 3 minutes, but the market doesn't do that so easily. That's my idea. Like it plays and it fakes, and maybe on the second, on the third, then it shoots, right? So and in between, sometimes it does form order reversal patterns, and other times it doesn't. It just takes out the stops and then goes the opposite way. So with that in mind, I I was looking at, maybe I should put my screen on. Let me check my screen. If we look at this on the let me put mine. There it is. Oh, did I take something that I shouldn't have taken off? The names?
No, that's good. It's all good.
Okay. All right. So what I saw was that yes, it did bounce from here as expected, right? So the order block is fine as still, but it's not on the first, right? The market moves. It's not like perfect. It's not like one time it comes and it reacts and that's it. Sometimes it does, but other times it doesn't. And what it did was it went here. I did make a lower high, so that's a point of concern. But as it was on the second time around, it left this this wick on the 5 minute. And looking at the lower time frames, you can see I can still be wrong. You can see more indication of there's that engulfing. So you have on the 5 minute, you have a wick, a huge wick, right? A huge pin bar. I mean, very bullish pin bar. And on the 3 minutes, you can't see much. There's a pin bar on the 3 minute as well, but it's not as pronounced as on the 1 minute where it has a pin bar and then closes as an engulfing, right? What does it do after it closes as an engulfing, right? This is on the fly reading charts, right? So this is the 1 minute, right? The order block. What does it do, right? The market is fractal, forms an engulfing, and retests it, and then moves out. That's the idea. And that's why I got in a couple of trades in again, because to me, this was the market retesting the same order block on the 30 minutes just a second time. Let me show the empty. Well, actually, there's no need to show it. When price, let me show it with an arrow, right? So this is where I enter. It forms the order block, goes up, and I'm expecting for it to come back. As soon as it came down and I saw it reacting, I start buying in this candle, in this green candle, right? And I may still be wrong. The fact that I'm entering here doesn't mean that I know what's going to happen. But if this is going to reverse, this is a great place. If this order block, this 30-minute order block, is going to be the order block that reverses price, then I got in at probably the best possible price, right? And I'm willing to accept a lower win rate because I don't have a quasi here yet, right? This is nothing. There's in terms of chart pattern, there's no quasi there. So, but it's only on the candlestick. Right, and if I don't know if I get it to, let me put in the stop. Assume I'm going to have this as my TP. I'm going to check what that would do to the risk reward. Let me see. That is around 42, right? 40 something, 42. If that happens, then, and since I got two trades in, it will give us 3.5 R. I risk 2, so it's actually, you should divide it in 2. So about 2.5 per each, but I got 2 in. Yeah, that's basically it. And let's see, maybe it will hit, maybe it won't. But the fact that we did have an H4 order block formed after we entered the first time around is a reason of concern, right? This order block is going to, you will have the same, in the opposite direction, the same force pushing price down as it moves up. So somewhere here, somewhere there, perhaps price might move, and I don't want to be in the trade when it does this. I should be taking it off somewhere in here, or maybe even lower. Depends on what that's if it comes back to that area. We don't know yet. Maybe it's going to all fail and stop me out, and I'll have 3 losers. But that's why I take smaller sizes, because if I lose, my side, I lose 3, which is 0.3, right? Because each one was $100 on a 100K account. So each trade is just 0.1%, and 3 in this case would be 0.3, and it's a losing day in my case if it stops me out, but I can live with that. That's easy to recoup when it does hit, I do catch a good move.
Yeah, that's all right. So I see that you have 2 positions open. Pretty good entries. I'm not entering anything here. I'm yeah, not gonna enter anything at this point. But I do see why you enter there.
So that's the issue is that I want to say something before we close the session, because coming back to the question that was asked, if I put limit orders in, I will have to guess in advance where to put my stop. That's very, very difficult. But if I wait and read price action, I know where I have to put my stop, right below this, because if I'm right, it shouldn't come back to this area and break this. It should, here it can go all of this, but eventually it should go up, right? So I know where my stop will be. But with limit orders, you'll have to sort of guess that. And I always had like difficulty, putting my stop with limit orders, because I have no information what it's going to do. By the way, I don't like how it is. I hope it doesn't form anything lower than this one, because that's not a good sign, right? If it starts doing this, then it should break out of this order block and should be retesting that order block as it moves out, not the other way around. But let's wait and see how it does. All right, that's it for me.
All right, guys, thank you for joining today. The giveaway has already been done. Congratulations to all the winners. So I do see that we have 700 likes now, but the giveaway has already been done. So we have 6 winners. Tomorrow we get another chance at another giveaway. And tomorrow, Victor will talk a little bit about his risk management approach. So, and by the way, guys, remember that, the giveaway is not always going to happen at the end of the live stream. It's not always going to happen, at the same time every time. So we want to make sure that the people that are actually able to win the giveaway are people that are engaging and watching the live stream. So it's not always going to be at the end of the live stream. Make sure you guys join. Tomorrow is going to be a good one. I'm very excited about that one, because I'm sure that Victor will be able to teach me a lot about risk management as well. And all the winners will be emailed. If you won, you should have gotten an email. Then you will get another email from Alex with a link that you can use to get your account. All right, guys. Thank you for joining, and we will see you all tomorrow.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide.